Hello and welcome to the latest instalment of MFS's Let's Talk Property podcast, where we connect with industry experts to explore an array of topics within the dynamic world of property. Before we dive into today's episode, I want to take a moment to share a quick disclaimer. MFS are a bridging loan and buy-to-let mortgage provider and are not financial advisors. The opinions and views expressed in this episode are personal to the host and the guest and may not reflect the views of MFS. For more information on MFS, you can find us at www.mfsuk.com. Be sure to keep up with our podcast updates on Instagram at MFS_LTP. Now, let's get started. Hello and welcome back to Let's Talk Property, and I'm absolutely delighted to be joined by Greg Cunnington from Legal & General Mortgage Club. Welcome, Greg. Thank you for taking the time out of your very busy diary to be with us.
Oh, thanks for having me. Always a pleasure.
Delighted. So, Greg, you're relatively new to Legal & General. So what made you join the team at Legal & General, and how have you found things so far?
Great question. Yes, I've been at Legal & General for, I was going to say 6-7 months, but I don't know when this is going out. So let's say 6-7 months and people can work it out from there. But yes, as you know, obviously we've worked together over several years. My background is all mortgage intermediary. And that was the hardest part because it was a role I just absolutely loved. There was no negative whatsoever as far as I'm concerned. Anybody young in the industry watching, please go into that side of things. It's absolutely fantastic career. But I'd done almost every role in that space. So I was at two fantastic companies, obviously at Alexander Hall, just part of Foxton's group, where started out as a trainee advisor.
It's when you were in short trousers.
You remember it well, don't you? I know. I actually looked young once. It was amazing.
We both do.
Yeah. And so loved it. Advised, obviously, until I moved to L&G and ended up on the senior management team, heading up external relationships. So that was important because it meant I was with lenders all day, every day, which is a part of the role I realised I loved. But also I headed up the relationship with Legal & General. So a little bit full circle there. And just really liked everything they stood for, how they interacted in the relationship, etc. Then had a fantastic 2 years at a firm called L&G Finance, learned some other sides of the industry, particularly the specialist markets, kind of a high net worth, which was fantastic. But then, as we all do sometimes, just had a bit of a eureka moment where I kind of went, I've loved every second of this, but I feel I've got the energy and young enough, and I kind of want to go into the distribution side of things. And then the stars aligned, and there was an opportunity at Legal & General, and yeah, there I was, which was great.
Excellent.
How have I found things?
Yeah.
Loving it, obviously. If Kevin and Claire are watching, absolutely loving every second.
Could do with a pay rise.
Yeah, always. But no, generally, it's really different. And I think that's the one thing I underestimated was how different.
Yeah.
Having worked with lenders very closely, I now realise, and this probably make you laugh, but the part you work on with intermediaries is just one very focused part of what you do as a lender.
Yep.
And obviously because of our restructure to mortgage services and not just club, so I head up lender relationships on the surveying team, the Ignite team, our technology platform and club. I realised the holistic lender landscape and everything you have to touch and work on is vast. So the professional development has been fantastic.
So it's been a little bit of a whirlwind for you since you started, because obviously there's an awful lot that you've had to learn in a very, very short space of time, and going into a big company like Legal & General. But what has been your primary focus since you stepped into this role?
So the big focus, and to be honest, the big focus for us as a whole, but it's just embedding, strengthening relationships. So for me, heading up the lender team, very much with lenders. I think if you look at the fact we've got, 115 lenders on panel,
oh, wow.
And maybe another 20 on Ignite for products, etc. That's a lot of relationships, and we're very conscious before the restructure. There was just one person spinning those plates, and you know her well. She heads up things with MFS. She's on my team, Sam Piper. She's absolute legend, as good as you can be at the role. But you can't deal with over 115, 135 lenders as one person, and it's not fair on you as lenders because I'm very conscious, there is a bit lender to lender, but we're a third of the intermediary market. So roughly 33% of all lenders lending goes through us at club. And you're there not with a strong enough relationship because of that resource. So we've now got a team of 8 just focused on lender relationships. Fantastic. Very narrow, very more focused.
Fantastic. And you mentioned obviously your experience in the broker market sector historically. How do you feel that benefits Legal & General as a club?
I think the one real benefit from it is just that I know what the other side wants from the club relationship. And I think, as with any role, same when I was an intermediary and I was just working with other people who'd come through the intermediary world, you do get a bit of groupthink, and it doesn't mean it's wrong, but sometimes it is good just to have somebody there who goes, actually, as I was on the other side of the fence, this added lots of value. And I think the same with our lender relationships. I constantly think about, I can't help it, I can't switch it off. What would our brokers think about this? What do they want? And I think that helps you guys, actually, because you've got somebody in the room who goes, actually do this or do that. But then also the L&G might has helped me with that as well, because things are more scientific with the data. So whereas before, and I've almost apologised to quite a few lenders now, because I've gone, yeah, I made you do that criteria change because we wanted it as a business, but you probably got like 3 cases, didn't you, and spent months doing it. Whereas now we've got scientific data from thousands and thousands of brokers and cases, and that's really opened my eyes to the wider lending landscape as well. But I think it's just that mindset of knowing what the brokers want, what they require, what helps them, what adds value to their day-to-day. That's, I hope, what I'd bring into the role.
Okay, fantastic. So looking at the specialist market, which is obviously where we very much sit, have you noticed any recent trends in specialist market that you've mentioned data a couple of times, but what's your data telling you about the specialist lending arena?
2 things. So first of all, that it's growing, but I think we all kind of know that. It's pretty obvious there. If I steal a quote from, I heard Jeremy Duncombe say it, so I attribute it to him because I keep using it, so it's only fair, but almost mainstream has become the new specialist. But also it's defining what is specialist, and I think you guys do a great job on it. It's probably a whole podcast in itself, but I think it's such a broad term now. So some lenders would say specialist is adverse lending. Some would say it's complex buy-to-let. Some would say, so when I was at LDN, our specialist department was bridging commercial development. Yeah. Anything on a sourcing system we said wasn't specialist. So I think for me it's now defining where as brokers and lenders we want to play in the specialist world, and then looking at where the market is. In terms of trends, the one that stands out is the professionalisation of the buy-to-let market. Yeah. So the good thing is, if I go back to data, there's still a strong buy-to-let market. And I think with the retentions next year, will actually be quite a big buy-to-let market. But it's what's underneath that. So I think if I go back to my old broking days, most of my buy-to-let business was landlords on 6-figure salaries who bought 2 beds in Fulham, and they did it as a 30-year investment to kind of pass on to their kids. Now you're probably seeing that same customer buy HMO in Sheffield. And in a limited company setup. And I don't actually think the mainstream market, although they've gone into some parts of specialists, they're still not great at that. And even some lenders who would say they're specialist buy-to-let maybe aren't as sophisticated as they could be there. So that's one area of the market I've definitely seen evolve, and some lenders have followed it, which is great, and some more to do.
So looking at the specialism, where do you see it going? Because obviously you've mentioned Jeremy's quote in regards to the high street becoming more specialist. Where do you see the specialist market going? What would you like to see? How would you like to see that evolve?
So I think first of all I'd like to see brokers understand that's where they can add value in the marketplace going forwards. So I think that the lending with the vanilla lenders will always be the bulk of lending. I don't see the percentages changing. It will always be the bread and butter. But in terms of brokers want to really grow and upskill, particularly at business level, for me, these are the underserved areas of the market. I think the advice element will get more specialist, and I really want to see that grow. So what I would like to see are firms who currently maybe see specialist as deals they do every now and again, maybe actually spending some time researching those marketplace, becoming specialists, getting teams set up, and really hand-holding there. And even if they still want to refer to packages, obviously do a fantastic job in this space. And also we've got the Referral Pro platform set up, which is doing really well. But I think you still want that upskilling and education to have those upfront conversations. And at the end of the day, if you've got a customer who you've dealt with for 10 years and then they call you and go, right, now I want to build up a bit of the property empire, do you really want to have to turn around and go, I can't help you, I don't know what I'm doing? For me, that's the gap in the market, and I would like to see that gap disappear.
Okay, so looking at the evolution of the market and obviously product innovation, is there, in your opinion, and looking again, I'm going to go back to your data because I know how much you love your data. So in regards to that, is there any specific areas of development and innovation that we at Market Financial Solutions should be looking at?
Yeah, I mean, it's an interesting one, isn't it? Because mortgage products in the main look exactly the same as 15 years ago. Yeah. So we have this innovation question all the time, and actually you guys are so hamstrung with kind of funding lines and setups and what would make profit. But let's say you could have blue sky thinking, the blank sheet of paper, offset buy-to-let. would be
Oh, wow,
absolutely
okay.
incredible for landlords, and it used to exist.
Yeah, good.
It's
God, we're showing our age, Greg. Will you put that in?
I know, that's a really good point, actually. I am, aren't I? But it would be a great product, so I'm going to stick with it. Offset buy-to-let. If it's a death of me, that would be a great product. The other one for me, which is a big one, is I think flexibility for landlords, which does exist in the market, but I think more so. So if I look at anecdotally the conversations I'm hearing are taking place, landlords aren't selling like the press say they are about to or are doing. That's not happening, but they're not sure. So lots of landlords at the point of not purchase so much, but refinance, want to hold the property for now, but are not sure what they want to do down the line. So on the residential space, you see some really attractive one-year fixed rates. They don't really exist in buy-to-let. I think that would be very attractive to landlords. No early repayment penalty. I mean, I know in theory why for a lender that's difficult to fund, but I know one lender very big in that space, and they were telling me their stats show actually nobody redeems. So if you get the pricing landlords aren't, they want the flexibility to sell, but they don't. And the other products flexibility I really like, which a couple of lenders do really well, is a lot of landlords are now talking about incorporating, but obviously it's quite a lengthy process, and to get HMRC sign off, which seems to be much rarer than some tax advisors paid out, etc., etc. Obviously, products will allow a client to do things in a personal name, but then move to a limited company name within the fixed period, but move the product with them. That's really attractive to landlords. And I think if things like that became more mainstream, basically anything which buys into how landlords think and the professionalisation I discussed, that's what's landing really, really well, I think, particularly in the specialist space.
So do you think the days of, what people used to refer to as the dinner party landlords, do you think they are still around, or do you think that those days are numbered?
I think that they're definitely going to decrease. I think they'll remain, as I mentioned, in terms of people holding on to properties they already own. But I think if you look at the budget and the increased stamp duty now on second homes as well, realistically, it's getting harder and harder to justify it. And the one really interesting thing we're finding as well, and you'll remember this, is with my intermediary days, can't help but that hat back on. You'd always say to every landlord, get tax advice. And you put in your letter, you told me you went to get tax advice. I don't think they did. I don't think they cared. And I don't think it really mattered either. Didn't really see many untoward consequences. Now everybody is getting tax advice, which is great. So if you are buying a buy-to-let property, you are definitely getting tax advice. Once you've done that, they're 9 times out of 10 going to tell you do things in a limited company route. That to me already moves away from the dinner party landlord situation. So I don't think it will ever completely die. And actually, if lenders are watching this, I think on the refinance space, that will remain a really good market for years to come. But the purchase dinner party landlords, I think, is definitely, they'll still exist, but I think they'll be buying 2 or 3, not 1.
Okay, interesting. I was at an event fairly recently, which was all about buy-to-let, and it was quite interesting because you're seeing the likes of HSBC and some of the other the other mainstream lenders coming into buy-to-let for 2025, which is quite interesting. And it'd be interesting to see how that proposition develops. And they very much, they're very much catering for that dinner party landlord, that non-professional, and it'd be interesting to see where that goes, really, I think.
And I think, especially as I mentioned, the remortgage market, that makes sense, because I actually feel for those lenders, because if you look at pre-Liz Truss, but lenders like the ones you've mentioned, they had really good like-for-like remortgage propositions with ICRs at, say, 4% that just worked. So they were mopping up all of that business, which let lenders like yourself get on with the more fun stuff. And then so they built really big buy-to-let arms, sales staff, operations facilities, product lines, and then nothing worked anymore because suddenly about 4% had to go to 8-9%. So I think now they're looking and going, actually, we had the infrastructure. We can see on the book it's performing well. We didn't get the arrears we feared we'd get. Let's step back in. So I think that will be positive.
And I think it's interesting, you mentioned the fun stuff, and we love doing fun stuff here, which is great. And we've taken that, innovation a step further when we launched into buy-to-let. We took the best of bridging and brought that over. And I think that's where you'll see probably some more evolution on it. And we're very much heavily into the professional landlords. We do an awful lot of portfolio landlord refinancing and things like that. And I like it. I think it's great fun. It's never boring. It's never a dull day. No 2 cases are ever the same.
So I think that's the daunting part, is going, my day-to-day looks like this. Everything you've just described sounds really fun, but I'm not quite comfortable. So if I'm not quite comfortable, do I really want to do it? And you're suddenly telling me I might have to spend 5 hours researching something. I haven't got the time to do that. But actually, as you know, and you probably see it in your back book, I'll be near certain at Invest with the quality of your clients and your service standards. But those clients don't just do one transaction. They do multiple, and they know other people who do multiple, and you build up little empires and infrastructures around working in that space. So, and I've seen it, and we both know a few brokers in the London area who that is their bread and butter.
Absolutely.
And they do unbelievable business levels. So, it's a really good marketplace to work in.
Yeah. So looking at potential changes in lending volumes, where do you see 2025? If I was saying to you, Greg, I need you to tell me what you think lending volumes are going to be in 2025, what's your head and your heart telling you?
It's hard, isn't it? Because the last 2 years have taught us anything. It's crystal balls with economists are useless.
Or the magic 8 ball.
Yeah. And if this is going out in 2025, I might look like an absolute idiot in a second. But
sorry, Greg.
Yeah, but we have, as you can imagine, we do a lot of forecasting and look at things. And actually, this was all pre-budget, but I don't think it should really impact lending volumes. What was really interesting is most lenders gave us a really similar answer. And that hasn't been the case for a couple of years. So that was positive.
That's good, yeah.
And we kind of got answers between 250 and 275 billion gross lending for next year. Okay. So we at L&G have forecast 260 billion. And that would probably be about a 10 to 15% increase on this year. So that in itself is growth in the market, which is what we've all wanted. But also, obviously, running a surveying business, we have to look into kind of the demographics that sit behind that as well. And everybody's forecasting more purchase and remortgage. And actually, one thing we've seen is there were points in the beginning of this year where the PT business going through club was up to 40%.
I know, that's
whereas in a normal market, it would be kind of 25% historically. The last 3 months, we've been back in the mid-20s. We're forecasting 28 for next year. So definitely more refinances going on, which I think is a positive all round. But also for next year, there's the underlying data on retentions, because that doesn't get forecast in the same way. So it's hard to get that data. But I think it was the CACI have published, they think there's 347 billion of retentions next year. Okay. For context, I think this year was 270. And there are 4 months, I think it's June, October, September, October, December, which would be 4 of the largest in the last 4 or 5 years. So huge retention opportunities next year. Obviously in twofolds as well. Half of it is the end of the 5-year fix at 0.99, so those the last people clinging on. It's not good for them. But then it is the 2-year anniversary of the Liz Trust products. So actually you've got landlords on like 9-10% who just took anything they could get to get a 2-year fixed rate, who will be coming into a much better environment. So real opportunity in the marketplace next year.
Excellent. Oh, it's all positive. I love it.
Well, I know.
It's great. Keeps us busy.
Fingers crossed, right?
So looking at that, how do you see L&G supporting brokers that are wanting to get into specialist lending or increase their specialist lending even further? What support and advice would you offer to them?
So as a club, it's something we're working on quite actively at the moment. I think with the increased resource, with the restructure, we want to make sure there's certain areas of the market we can support brokers on exactly that kind of thing. So with specialist lending, we've got a few things going on at the moment. We're very lucky to have someone in my team, Jane Simpson, who's very experienced in that space. So she's taken a bit of a lead on things with the broker team. For example, we're doing a session next month where it's for any broker in the geographical area to come along. I think we've got about 100 brokers coming. And what I like is we've not teamed up with any specific lender. We've made it lender agnostic. Because you guys have got such expertise, way more than we would have at club. So it's about working in collaboration to get that to brokers. But it's a day of doing exactly that. It's a day to come along and educate yourself in the space. So there's going to be a tax advisor, there's going to be a solicitor in that space, going to be various lenders, and going through kind of what you see, how you upskill, what is different. Because I do think working in specialist, having seen it, it is a bit like almost the SAS of broking, isn't it? But you do need that understanding and holding your own with customers to have those conversations. And knowing what lender does what, because you guys have such good USPs, but it's hard to absorb that if it's not your day-to-day. So I think for brokers, those events are absolutely brilliant. So we'll be doing more of those, taking them around the country, doing more online, opening more support, and just having a bit of focus on the specialist space and specifically working with all the lenders like yourself in that sector.
So looking forward, how do you see L&G supporting, and what innovations have they got that they're looking to do from a broker club point of view?
It's a very good question, as most of us say. So I think it's a few things. It's looking at those market areas we can add value. So others would be new build, for example. I think later life is a really underserved market area as well. We've also got the Ignite platform, which has got huge resource going in internally at the moment, and I think brokers will really see the benefit of things there next year. I think as well, if you look at this year, I think this is actually underplayed how many criteria changes there have been this year. we're all used to criteria changes, but it's been non-stop and significant though, not just small ones. So obviously for brokers to stay on top of that, I think having the platform like Ignite to upskill there is significant. But also for me, we want to start using more of almost the infrastructure as well. So we have so much data. For example, in the surveying side, they produce this monthly market report, and it's amazing. And I kind of looked at it, we need to share this more. So that's now going out to kind of lenders and snippets to broker partners.
So looking at relationships, obviously that's quite key. And I know, obviously, you and I know each other. We only met yesterday. We've known each other for quite some time, which is great. If you were building a new relationship with somebody, what do you feel are your top priorities to make that relationship tick?
So first of all, it's kind of like just very clear definitions on what both sides want out of a relationship. That's absolutely key. So I think there's nothing worse than the old school relationship. We all love the social aspect of things, but you don't really want to meet somebody monthly and go through things and just talk kind of football and family and then realise, we didn't actually get any outputs there, did we? And we haven't moved anything on. So what are we both doing there? Where can both sides add value? Where are the gaps? That's the big one. And that comes back to your previous question. But as you know, broker firms, and this has actually been one of the biggest openers for me now with this wider distribution lens, they're all so different, aren't they?
Yeah.
All have the same aims, outputs, all great to their customers, but their cultures are so widely different. So relationship-wise, it's about working out, okay, what is your culture? What's our culture? Are we a fit? How do we mesh? How do we work together? That's it.
So looking at Legal in General, obviously one of the things that you're probably going to want to do within Club is to grow that broker network and that support and people using you. I mean, you've already got a third, but 33%, but there's
why not
still
go more, right?
Why not go more, right? Let's go big or go home, right?
Exactly.
Kind of thing.
Absolutely.
So what are you looking at? So how are you going to support your membership over the next 2, 3, 5 years? What's your plans?
Yeah, it's a great question. And actually, one of the reasons we even grew lending last year, I think to 106 billion, was through growth of members, which is amazing. But I think, to be honest, it's about constantly assessing ourselves, going, how can we be the best we can be? And it's a really odd thing to say, but obviously, when you're market leading, actually, that is a hard question sometimes because it just takes a small drop off, and before you know it,
Got avoid.
Yeah, absolutely. And particularly there's so many good other firms out there that it would be great to grow. But as you know, we don't do things by chasing those relationships. So it needs to be by just performing as well as we can. So for me, it's identifying those gaps. What do brokers need? Where can we continuously add value? I can assure you, literally almost weekly, we have meetings just going, what should we be doing? Where do we add value? It's a really, really fast-paced environment.
So obviously where we are at the moment, where, rate environments have been, you look at swap rates following, you've already mentioned the budget, they've been up and down and inside out and back to front. What would be your one wish for 2025?
Stability.
Yeah, I thought that.
I think everybody in the industry needs a stable, almost boring, dare I say it, marketplace. So let's say we get 10% growth just for market conditions and forecasting. That's 10% more business for everybody, but by doing the same thing, which, is great. And I think the good thing is everybody's already thinking, well, I need to outperform 10% then, which is brilliant.
Yeah.
But still, there's growth in the market. We've needed that. But also, if you look around anecdotally, and you can see it, and it's great, it's got a more open topic, but I think people are fried, they're frazzled.
Yeah.
And it's at every part of the industry. If you look at for lenders, how do you forecast, how do you hedge, how do you do things there, changing products, criteria. Yeah. On the broker side, they've got admins who have been chasing rates for the same case maybe 10 times and doing all the paperwork and re-compliance checks that involves. I think there's an element people want to go back to a normal working week, a bit more work-life balance, and I'd like to think next year is the year everyone will be afforded that opportunity. But also it means we can then all stay out the windows a bit more and go, right, we're all doing a really good job. How do we do this a bit better? Which are the conversations we all love, right? And we're all very good at them.
Absolutely.
But having a bit more time in the day to do that would be fantastic.
So I'm going to take you on a little bit of a time warp. So it's December 2025. I want you to predict what you think the Bank of England base rate will be.
3.5%.
Okay.
I'm very half glass forward, a bit of an optimist, as you'll know.
I know.
Yeah. Yes, and I don't. So, but I do think at the moment, of course, the markets have reacted how they reacted. It's not been too big of a problem. But I think if you look at the rate cuts going on in America, and if you look at the going on in the Eurozone, and to be honest, did we keep them a bit high too long anyway?
Yeah.
Bank of England have been risk averse every step of the way, haven't they? And inflation obviously is really down. I'll still settle on 3.5. I'll stick at 3.5 by next December. And if we're up and we're at 6%, something's gone really wrong, hasn't it? So
Fingers crossed. It'd be good to have. I think you're right. I think we need that level of boringness and stability, which we've been crying out for quite a while.
we do, and I think we do need rates to come down a bit, just because there's client sentiment. So what we're hearing lots are clients want to do things, but they're getting it rammed in their face in the press that interest rates are coming down. So they're going, well, I need to wait 6 months then. So I think we need to see the rates come down. As soon as you see a rate being the 3, it changes everything, right?
Yeah.
But then also, if you look at affordability calculators and buy-to-let ICRs, we're at that tipping point, aren't we, where they now work much better than 18 months ago.
Yeah.
But there's still a problem in the market. You know, affordability, it's all well, and we've got some lenders now with great LTIs, but the second you put it through the calculator, if anyone's got a normal life, they've got kids in the car on finance, they're not getting anywhere near what they need.
Yeah.
If rates come down another %, that changes unbelievably in the other direction. So it really opens up more borrowing for customers, and I think that will have a big knock-on impact on the market as well. And if you look at, you know, we all have an element of why do we enjoy doing this job. For me, an element's always been social mobility, first-time buyers in particular. Those affordability calculations are a real problem.
Yeah.
So I think I'm excited that in the next 12 months we should see that going the other direction. But let's hope.
Well, fingers crossed, by the time your two get to be setting their foot on the property ladder, things will be a little bit more stable for them, you know, and they won't be living with you till they're 40.
We'll be working till we're 80, I'm guessing, as well, which is going to be absolutely great, isn't it? But
gosh, I hope not. Definitely hope not. I have great plans, and it's not working till I'm 80, I can assure you. Greg, listen, thank you ever so much for your time today. Massively appreciated, and thank you for your insight and your very openness. And thank you for joining us on Let's Talk Property.
Pleasure as always. Thanks for having me. Cheers, Karen.
If you enjoyed this episode, don't forget to subscribe, rate, and share it. You can access our previous episodes in all the usual places, as well as on our website at www.mfsuk.com/podcast. You can also stay connected with us on Instagram at MFS_LTP. See you next time.